I have a $250 bonus that has to be put towards investing. As a first time investor, I want to know what the best options are for me. Here to talk with me about it is Jim Petitto, a managing director for Accenture, and my father. Dad, how are you?
I'm well, Michael. Thanks for having me.
Not a problem. So, just to get right into it, what do you think are the best options for first time investors just looking to get their feet wet a little bit?
I think one of the best things to do is to look into setting up a brokerage account. And the 250 could be seed money, but essentially what you want to do is you want to start to contribute money into that account on a regular basis. So think about what you have for the jobs that you do during the summer, any particular income that you're or jobs that you have during the school year, and just dedicate money going into that brokerage account and then start to buy into funds or stocks, and it's a set it and forget it. Like, you're not going to look to sell that. You should just be looking at it long term, and looking at picking stocks that are going to be paying dividends, and they'll be getting income over the term, and then you start to invest those.
Any other specifics for any other type of funds or dividends?
Well, when you think about the funds or particular stocks, you want to make sure that you're doing your research. You want to look at company news. You want to look at the specifics of how the stocks are doing in terms of their particulars. How are they graded? What are their earnings? What are they actually paying for dividends? Have they paid dividends? The one important thing to just think about is, what type of risk you want to take on. You're young, so you can take on some risk, but don't take on too much risk, or else that 250 or what you're putting into it will quickly go to zero. So I think it's important to do your research and do your due diligence.
Do you think it's okay for someone as young as me to maybe rely on someone else, like maybe a broker or someone, a professional, or would you rather have someone like me do their own research, be financially educated? What do you think's the best path?
I think it can be a combination of both. So when you think about it, 250 is going to be a start. You're going to start to build on that. I mean, I personally know you have some savings, so what you're actually getting in your savings account is pretty minimal. So we've talked about maybe transferring some of that and starting to think about buying some stocks, maybe looking at some ETF funds, passive index funds. So there's a lot of things that you can do, and I think it's just looking to see again where that risk is, where you could take advice from a broker. But as you think about these brokerage accounts, if you are enlisting advice, nothing's free. Things are going to have cost to it, so you need to kind of weigh all of those factors. But the bottom line is, you're young, you can take these risks now, and you go ahead and you start to do this on an incremental basis over the long term. Then you're going to have something that you can utilize, whether it's going to be for a down payment for a house, or other things that you're going to need in the future.
You've mentioned risks a few times, so there are risks and then there's just bad investments. What do you think are some of the investments that first-time investors should just simply avoid?
Simply avoid. I mean, from my standpoint right now, there's cryptocurrency is not something that I delve into. I feel that there's a lot of volatility. Many people might disagree with me. I know people who have invested in cryptocurrency. It's just not something, maybe I don't fully understand and appreciate it. But when I look in terms of what I'm going to invest in, I look at tech stocks. I look at stocks that I think are a bellwether of the economy. When you think about Home Depot's up because people are actually looking to improve their homes. And, that has been a very, I'd say, a good stock over the long term, as well as, Walmart. Those are stocks that pay decent dividends, and I'm able to use that income as an example in my Roth IRA, and then go ahead and reinvest over the course of the year based upon the income I'm receiving in new stocks, and take risks. I took a risk during the pandemic, as an example. Even against the advice of the broker, I bought stock in Moderna, and Moderna skyrocketed. So sometimes I do take a little bit of a risk, and that was something that I think paid off. and I've since held on to it, and it's still doing very well.
So I think we covered a lot of avenues here for first-time investors. Is there anything that we missed?
Well, I think you have to look at I think your total portfolio in terms of what you want to start off with. One of the things that, and I always look at it from the lessons learned, if I, in terms of entering my first job, just went ahead right away and maxed out my 401k, I would have been in a much better position. My advice to yourself and others that are going to be soon entering the workforce is right out of the gate, max out your 401k. You're not going to be able to rely upon Social Security for certain. Read the article that you had. I mean, there's obvious reasons why. But your 401k is something that is going to be investing in the market. You can diversify. There's a lot of products that you'll have access to based upon who your employer chooses. That's something that you should certainly max out. Because once you start putting the money aside and you're not really paying attention to it, it'll start making money for you. And again, it's over the long term. Don't be a day trader, is also my advice. Because that stuff is it's risky, and a lot of people, end up being underwater, bankrupt as a result of it.
Thank you so much for joining me today.
All right, my pleasure. Thanks, buddy.